Hey guys, welcome back to another video. Today I kind of wanted to go more into detail about what happened in the stock market today. There was a big drop at the end of today. It was looking like a good day. I also just want to go over some plays in the portfolio, a new stock that I'm actually thinking about buying, and yeah, kind of just inform you guys. So if you do enjoy this content, be sure to like, subscribe, and also comment down below what stocks you guys are buying. I'm very interested to hear that. I want to see what my viewers are buying and what they're looking at in the stock market. That would be very interesting. And yeah, so without further ado, let's get right into it. As we can see, we're having a great day in the stock market, at least in the portfolio. We were up 0.9%. We were up $135, and then we're down $251 and down 1.65%. Big swing of events. And guys, this is because, as we can see from Yahoo Finance, actually, they published this statement, this article, and it says U.S. stocks lost ground on Friday after the White House said tariffs against Mexico, Canada, and China will take effect on Saturday, rightening fears of a coming trade war with the nation's closest trading partners. White House Press Secretary Karoline Leavitt said the president would impose 25% tariffs on goods from Mexico and Canada, as well as a 10% tariff on goods from China. So, guys, this actually hurt a lot of stocks. As we can see, e.l.f. is a big player in the makeup industry. They get a lot of their supply from China, so this 10% tariff being put on their company and their production was a very hurtful announcement. As you can see, they were trading at around 108 actually today, up 2%, and they dropped all the way down to $100. e.l.f. hasn't been at this level in a while. They haven't been under $100 since 2023. So all 2024 they were above this. This is not good for the company, definitely. But there's the fear with TikTok and with the tariffs on products from China and such is definitely an aspect to take into consideration when buying these companies that get a lot of their supply from out of the country. But yeah, as we can see, this is a company that reports earnings soon. They're expected to grow. So I made a buy today. Actually, this is one of the moves in the portfolio. $200 into e.l.f., almost 2 shares at this price. $101.86 per share I got them for. This is a steal for me, I think. I want them to drop e.l.f. as much as they can. The lower the better. I think $100 is an absolute steal for a stock like this. Company that's growing at this rate. They were at $210. They dropped all the way down to this $100 range, and the market saw that was undervalued. I think it was at 140. That was the highest it reached after dropping that far, and now it's back there because of the fear. So yeah, we're gonna see what happens with that. They report earnings next Friday. I'm very excited to see it. Also, another stock that I'm adding to still is AMD, picking up as many shares of that as I can. They were also up on the day, up 119 actually they hit, and then they were about to end at 118, but the announcement of this made their stock drop a lot too as well. A lot of great stocks dropped here at the end of the day following that announcement by the press. The tariffs are not a good thing for these companies. They're going to lose more money. They're already heavily taxed, but this is leading to them losing more of that top line. So yeah, not really any stocks responded positively to this news. All the stocks are kind of down a little bit. It's definitely a rough one. And Celsius, this is a stock that was a good amount today, actually. Well, yeah, it was up 2% today. But following this drop, I do like it even more. The more it keeps dropping, I'm going to keep adding to this position. I'm going to deposit some money into the account probably. Keep adding to the Celsius position. It was under 25 for a little bit, and now it's still under 25. It's still in that range. But yeah, I really like Celsius at this price. It is no secret, but I think this is a very not generational. I think this is a good company. They're not insanely established. They're not huge, but I think that they're obviously a one-trick pony. They have their drink, but what they do very well. The way they distribute it, and their energy drinks, I think, are the money they make from those is very impressive, and they're focusing on that, and that's a good thing to focus on. It's doing their business very well, and I see that growing over the next couple of years. I think that there have been some conspiracies with health and how they affect your health, but we all know that energy drinks aren't the best for you, but people continue to drink them. Just like there's a lot of things that are unhealthy that people continue to do. Tobacco companies are still growing, Coca-Cola. So yeah, that doesn't scare me off from the stock. I think that it's a company that's still going to grow a lot. And also, a stock that I did want to go over is Canadian Pacific, Kansas City Unlimited. This is a stock that has been actually up the past 3 months, but the past year it's down. So it was down around 10% for a while here. I was unaware, or I was not looking to buy this stock at the time, sadly. So it's actually climbed 10% since then. But in the past year, it has been at $91. It's been 14% higher than this, but it's down 0.65% the past year. If you were to invest that into the S&P 500 at the same time a year ago, you'd be up a lot more than negative 0.65%. We can say that. But yeah, the stock has been basically flat for the past, you call it 3 or 4 years. Been basically flat, which is not good. The past 4 years, you could have put your money almost anywhere else, and it would have gone up. But I mean, all time, we can see that this stock has been very, very good. Outperforming all time, outperforming the S&P 500 since 2016. They're up 1,203%. And this is a company that I like because of their low P. This is a railroad company, so the tariffs for them are going to affect them a lot. And I think that there are a lot of fear around these tariffs in the presidency, so that's what's kind of driving the price down here. And I'm not really worried about it. I think that this company almost kind of has a monopoly over the railroad industry. They control a lot of routes throughout the country and a lot of different places across the world. They also pay a little bit of a dividend. They're a pretty big company too, $75 billion market cap. And they have a 27 price to earnings ratio. It's relatively low. And yeah, I think that this company is definitely a good one to watch, a good one to go for right now. I guess I bought some in May. I actually did know about it, but yeah, not much at all. But yeah, guys, I think this stock is definitely one to hold for the long term. This is one that I'm definitely going to keep an eye on and probably put a little bit of money in. Yeah, I mean, I think this stock is really good. I don't really have much more to say. I think that this is a stock that can really thrive in a space like this, and all the fear built around it is just makes me want to buy it more. With this stock, I would not buy options on just because they're more of a long term, like even longer than 2027. I'd just hold them for a really long time. Also, the option liquidity is very low on stocks like these because they're not very their IV isn't really all that high. They don't move around a lot. This is a stock if you want to get a solid return per 10 to 20% a year. The past 5 years they haven't been doing that, but all the time they're a great company. The past 5 years they have been very lackadaisical and their stock has not been moving a lot. We cannot lie. So yeah, that's one that I'm definitely looking to buy into. And another one that I'm looking to add my position on pretty aggressively right now is Cheesecake. It's kind of slipping away from me at $55 now. I'm up 42% on my position that I want to be a lot bigger, but 42% for how much I have in there is not a big gain. But I mean, as you can see, the stock is just on a tear. Past year up 61%. I mean, this is one that's been through its ups and downs definitely as a company, but I think they're really getting on track now, and I think Wall Street is actually starting to recognize what this company really has. Their PE is very low for what they're doing. They're sitting on a lot of cash. Their market cap is not big at all. I think compared to other companies in their industry. Let's check out Wingstop. This is not exactly like Chipotle, or not exactly like Cheesecake Factory, but I mean, yeah, there's just 4 times what they have, and their PE is 90. And then let's check out Chipotle. And these companies aren't exactly like Cheesecake Factory at 80. There's 40 times, and then their PE is 54. So yeah, I mean these companies are way bigger than Cheesecake Factory, but I think that wrong one. I think that Cheesecake Factory is actually very well positioned for getting to that level that these other companies are at. They do pay a nice little dividend here. I'd just reinvest all that, but you can keep it if you want. But I think that this is a company to definitely add some diversity into your portfolio. I know a lot of me, myself included, are heavy into tech in my portfolio. That's basically all that it relies on. So I do want to add more to this Cheesecake Factory position. But yeah, this is a company that has a lot of different businesses inside of it. They actually, I think it explains right here, because they have the Cheesecake Factory. That is their big brand right there. But they also have, yeah, other FRC segment includes brands acquired from Fox Restaurant Concepts, and they have the Flower Child brand. This is one that I believe in very strongly. I think that Flower Child is going to be very, very big over the next coming years. You're going to hear about it more and more. Flower Child, and then they also have North Italia, which is a restaurant that's been rising in popularity. People like it. It's Italian food. It's nice. It's high end. And these are some restaurant concepts. These are few of many that they're trying, but these are two. The North Italia and Flower Child are two brands that are really beginning to take off, and their ticker symbol is Cheesecake Factory, which I think is a little misleading. That's not, you're not buying Cheesecake Factory per se. You're buying their all their brands that they own, and the ticker symbol is cake. So it makes you feel like you're only buying Cheesecake Factory. But guys, I beg you to please think of it as if you're buying multiple companies. This is a much bigger play than just buying Cheesecake Factory. While Cheesecake Factory is a great restaurant with a lot behind it, I think that you're buying this mostly for the other companies, because Cheesecake Factory is already well established. They're already doing their thing. They're growing at a steady pace. They're doing what they've always been doing. But the real opportunity in this stock is the companies that they have growing and that they just started. That's where the real money is at in this stock, in my opinion. So yeah, guys, I mean, that's really all I have for this video. Not a great day, sad announcement, but I think that this gives buying opportunities. Elf is a stock that I'd buy up. CP I'm watching. AMD still down, but really Elf, that one, especially if it's flirting with dropping below 100. That if it drops below 100, you can't stop me from buying shares of Elf. I believe in that company. So yeah, guys, thank you for watching the video. Be sure to like, subscribe, comment down below, and I'll catch you guys in the next one. Thanks for watching. Peace.